The new Taiwan dollar, NTD, which is Taiwan's currency, is one of the most stable currencies across Asia. If we compare the NTD to many other currencies like the Japanese yen or even the Korean won, we get to see that the NTD since the 1990s has been trading between 25 to 35 new Taiwan dollars per US dollar. That's an extremely narrow range for a span of over 30 years, especially when you consider that global markets have gone through the Asian financial crisis, the dot-com crash, the 2008 global financial crisis, the COVID-19 pandemic, and then a period of aggressive US monetary tightening. In contrast, the Japanese yen has seen wild fluctuations. In 1995, it was trading at around 80 per US dollar. By 2015, it weakened to 120, and in late 2022, and again in 2024, it fell past 150, a level not seen since 1990. That's a movement of nearly 100% in depreciation over 30 years. The Korean won also behaves more like a risk currency. It has traded from 700 to 1400 won per US dollar over the past few decades. Even the Chinese yuan, which is backed by the world's second-largest economy, has seen a gradual weakening trend. Around 2015, the yuan was roughly 6.2 yuan per US dollar. By 2023 to 2025, it has fluctuated in the 7.0 to 7.3 per US dollar range, reflecting a approximately 13 to 18% depreciation over the decade. The yuan's drops often come in spurts during economic stress. For example, in late 2022, the yuan slid to about 7.33 yuan per US dollar, its lowest level since 2008, prompting Chinese authorities to intervene with support measures. While the yuan's day-to-day volatility is limited by policy, it has trended weaker due to China's slowing growth and interest rate differentials. Compared to the yuan, the TWD has been firmer. Not only has Taiwan's dollar avoided long-term depreciation, it also moves more freely in response to market forces. Taiwan intervenes mainly to smooth volatility, not rigidly peg the rate. In fact, during the May 2025 rally, the TWD led gains in Asia, outpacing even the yuan's strength. This indicates that, at least in the current cycle, the TWD is viewed as relatively robust. Does this then suggest that Taiwan's currency, the NTD, is strong and stable? Well, yes, but with important context. The first and most important factor that backs the strength of the NTD is Taiwan's enormous trade and current account surpluses. In 2024, Taiwan's current account surplus was about 14.3% of GDP, one of the highest in the world. For context, that's far above the Asia-Pacific average of approximately 1.9% of GDP. This surplus reflects Taiwan's strength in exports, especially high-tech goods, semiconductors, electronics. Every year, tens of billions of US dollars flow into Taiwan from global sales of its products. These inflows create natural demand for TWD. Exporters eventually convert their dollar earnings to local currency, tending to strengthen the TWD. In fact, years of large surpluses have led Taiwanese firms to accumulate long USD positions, which, when unwound, can cause rapid TWD appreciation. The surplus with the United States in particular has grown. Taiwan's exports to the US hit a record $111.4 billion in 2024. While such external surpluses bolster the currency, they have also drawn US scrutiny. Taiwan is on the US Treasury's monitoring list for potential currency manipulation. Taiwan's central bank defends the surplus as a structural result of US demand for Taiwanese tech, not deliberate currency policy. Regardless, Taiwan's persistent trade surplus is a key pillar of TWD strength, supplying a steady stream of foreign exchange earnings. Thanks to those surpluses, Taiwan has amassed one of the world's largest foreign exchange reserves. As of April 2025, the central bank held about $583 billion in reserves. This is the fourth highest reserve stockpile globally, trailing only China, Japan, and Switzerland. Large reserves equip Taiwan's central bank with plenty of ammunition to stabilize the currency if needed. Indeed, the bank has a history of intervening, buying or selling foreign currencies to smooth out sharp TWD swings. Officials assert they have sufficient ability to deal with fluctuations and will step in to ensure stability. For example, during past crises, such as the COVID shock, the central bank used its reserves to maintain orderly markets. This massive war chest gives confidence that the TWD won't spiral into free fall. The bank can counter speculative attacks or excessive moves by tapping its reserves. It also means Taiwan can afford to let the TWD strengthen at times, as it did in 2020-21, because reserves can be deployed to buffer exporters if needed. In short, Taiwan's financial defenses make the TWD less prone to instability. Then thirdly, there's also Taiwan's low and stable inflation, which supports a strong currency by preserving purchasing power. Over the past decade, inflation averaged only approximately 1% annually. Even during the global inflation surge of 2022, Taiwan's CPI rose a relatively modest 2.9%. By April 2025, inflation was back near 2.0%, comfortably within control. The central bank projects inflation around 1.8 to 1.9% for 2025, indicating price stability. Low inflation means the TWD hasn't been eroded domestically, which tends to correlate with currency strength externally as well. On the interest rate front, Taiwan's benchmark interest rate is 2.00% as of March 2025, after a series of small hikes from record lows. This is far below US interest rates, approximately 5%, and many peers, reflecting Taiwan's mild inflation and cautious monetary policy. The lower rate differential was a factor in TWD weakness in 2022 to 2023. Capital flowed to higher-yielding USD assets. However, Taiwan's central bank has signaled it is prioritizing inflation control and views current policy as appropriately tight. Governor Yang Qinlong stated that inflation is under control and there are no conditions to loosen policy further. In essence, Taiwan's solid price stability allows it to maintain low interest rates without undermining the currency. And if needed, the bank can adjust rates or use other tools to defend the TWD. For example, it has used FX swap operations to help local financial institutions hedge currency risk. Finally, one must also understand that Taiwan's economy has been growing healthily, underpinning its currency. GDP expanded 4.59% in 2024, a robust pace powered by tech exports, for example, global demand for semiconductors and electronics. While growth may moderate to approximately 3% in 2025, Taiwan's fundamentals, a high-income, export-driven economy with low unemployment, inspire confidence in the TWD. Additionally, Taiwan's external balance sheet is strong. The country is a net creditor with more foreign assets than debts. For instance, foreign exchange reserves, US $580+ billion, cover Taiwan's short-term external liabilities many times over. The private sector, especially large insurers and tech firms, hold substantial overseas investments, but they also hedge those exposures. Notably, Taiwanese life insurers have over $1 trillion in assets, much invested abroad. The recent TWD surge did pose a mark-to-market hit on those overseas holdings. A 10% TWD appreciation could theoretically wipe out a full year of profits for some insurers. However, insurers have built FX reserve buffers during prior periods of USD strength, and regulators note the industry remains well capitalized. The central bank even subsidizes some hedging costs to mitigate currency mismatch risks for insurers. This prudent management means that Taiwan's financial system can weather currency fluctuations without instability. In summary, the island's solid growth, huge reserves, and careful financial supervision all buttress the TWD's stability. So, As you can see, the new Taiwan dollar emerges as a relatively strong and stable currency, rather than one that is weak or in free fall. But anyway, do let us know what you think. Thanks for watching.